So yesterday we discussed the fact that throughout this entire week, we talked about how Monday, Tuesday, and Wednesday are probably going to go to the upside, although this is ultimately going to set up for a move towards the downside. And we got that yesterday at 4 p.m. All of this was anticipated, although in terms of the little, micro movements, I may not have caught them all, but overall, we have been pretty spot on. And so in this video, I'm going to give you guys the update, just discuss what happened here, and also discuss a really underrated chart that nobody's looking at right now that will further solidify the fact that Bitcoin is going to go down. The first thing that we are going to mention is the fact that this move right here on Bitcoin, the top, actually came on Trump's announcements on the tariffs and how he is planning to further increase the tariffs. And so the market reacted accordingly, which is with fear and with a bit of panic. Although for us, we completely foresaw this, like news or not, this is one of the lessons that I hope that you guys will learn, is the fact that price action, most of the time, will forecast what the news event is going to price in. Ultimately, the announcement of the news event is just going to help the retail masses and the people that do not trade and do not understand price action rationalize the move that happened. For the people, for the normies, they are going to be able to say, oh, because of the tariffs, price is actually going down now. No, we saw this at the start of the week. After you failed to close above the previous weekly candle, you swept out the liquidity and you closed below, showing weakness. We already foresaw that. And we also foresaw the fact that the start of the week is probably going to be bearish because you are going to trade into this daily fair value gap. And ultimately, even though you did wick above it, as long as you do not close above the fair value gap, that is already confirmation for bearishness. So this is all we want to see. And so this brings me on to the second point. What happened yesterday and what happened on Bitcoin, well, and across, most major markets was driven by macro, or was driven by news, or more specifically, it was driven by macro. And tomorrow, I'm going to be hosting a free macro masterclass. This is going to dive into everything you need to know on how to read macro factors like inflation, interest rates, tariffs, geopolitical stuff. There's not going to be any fluff. There's not going to be any BS. It's just going to be 2 hours of pure value. If you guys haven't already signed up using the first link in the description box below, you are missing out. So make sure you sign up before we start the masterclass tomorrow. I promise you it will be worth your time. But anyways, let's get into the rest of this video. So again, nothing too much to talk about on the weekly. So let's go back onto the daily. So yesterday we got a sweep of, well, from what you can see here, this high has not yet been swept, but I will show you now the Bitcoin CME futures chart, and you are going to be able to see more clearly that previous daily high right there has already gotten swept. So essentially on the CME chart, which right now, as of this current day and age, much more price action for Bitcoin is driven by institutional investors. And so the CME chart now more than ever is going to become very important. So while it may not look like the highs got swept on the Binance charts or whatever other crypto exchange, CME is the one with the highest amount of volume. And so we take that into account, which is basically this high, we can treat it as already being swept. And so now we can fully play out our bearish thesis. And yesterday, assuming that this high was swept, you failed to close above it, which signals a lack of winning buyers to keep price above this level, which means that this is weakness. And we also talked about, again, how Monday, Tuesday, Wednesday is probably going to set up for an aggressive move towards the downside that will likely break structure. In this case, you have broken structure right there. And right now, as of the time that I'm filming this is right after the London session. We are about to enter the New York session. And so today, I think the play is going to be, you're going to sweep out the Asia highs. You're going to sweep out the London highs during the Asia session, fill in some kind of fair value gap, and then you're going to head lower while retesting this bearish structure break. And the way that this is going to play out is, let's identify a couple of fair value gaps that is present on the chart at the moment. And we can see that we have two primary fair value gaps. One right here at 84,800, this one will be the high one, and one right here at $83,900. Now, the beautiful thing about this lower fair value gap is the fact that you have a weak high over here. A weak high is a high that is formed without sweeping liquidity. So you can see that this high is literally like you did not sweep any liquidity. Now, the difference between a weak high and a strong high is, for example, right here, you formed this high right here after you swept out this liquidity. And so this becomes a strong high, which means that chances are you will not revisit this area until the down move is complete. We want to be always trading into strong highs and strong lows, and we do not want to be trading into weak highs and weak lows. This same concept, by the way, is exactly what we used to determine, if you guys remember watching my videos from about 2 weeks ago, we said that, hey, even though Bitcoin kind of looks bearish, the fact that you have these three relatively equal highs over here, which are weak highs, they will eventually get swept, which means that you will not get a large move out of this because these will act as a draw on liquidity, basically tricking most of the retail masses and people that do not understand trading into thinking that, hey, it is, oh, it's bearish, you're going to go short, and then they get stopped out before the ultimate bearish move actually happens. And it's also the same theory that we used, and that is something that we called out live right here on YouTube. And right now, the fact that over here you have relatively equal lows means that this is going to be the liquidity level that's going to be targeted. But in terms of the setup for today, look for New York to sweep out these weak highs. And one of the reasons why we do not want to be just taking a short right here is because, again, you have a weak high right before a fair value gap. And some of you may argue that, yes, the fair value gap has started to be filled, but fair value gaps can be filled multiple times. As long as there is still, an inefficiency in the market can still fill it in. And in this case, this will line up with one of my favorite setups in all of trading, which is a weak high sweep into some kind of point of interest. In this case, that's going to be the fair value gap right there. If you do get it sometime during the New York session, which as of the time that I'm recording this right now, will start in about 2 hours, 2 to 3 hours. And today you also have news, although tomorrow you have non-farm payrolls. Overall, this week is shaping up to be one of the most volatile weeks we have for the rest of the month. So do take advantage of this. Either you're going to get rejected off of this fair value gap, or you're going to get rejected off of this fair value gap, which also lines up right here with a breaker block. So for those of you familiar with ICT concepts, this is actually a breaker block. And so if you do return back to 84,800 today, which may or may not happen, I don't know, I cannot predict the markets, but what I can give you is the scenarios and how to act whenever those scenarios are, hit. In this case, again, you are anticipating downside. It may not happen today because of how volatile yesterday was. Today could just be some kind of an accumulation day / another setup day, which is within today, you're probably going to get 1 pump, 2 pump, and maybe 3 pumps up. And then tomorrow, during the London session or the New York session, you're going to head into some kind of higher time frame key level, which in this case you don't really see it on the daily chart, but on the 1 hourly, it would be, this entire block right here. This entire series of up close candles is going to be your resistance point. Basically, you're looking for 1, 2, 3, and in this case, it would actually be 1 to 2 impulse moves towards the upside. Some of you may say this is a Elliott wave theory. You may be correct, but this is just generally what I would like to say is a market maker sell model. For those of you who want to get an understanding of what is the market maker sell model, this is how it looks like, which is part of what we teach here at Bootcamp, which is a program that helps you get funded within 30 days from start to finish, because you will be working with me one-on-one. If you may be interested in that, do send an email to aoc@theartofcrypto.co with the words Bootcamp. So far, the reviews have been outstanding and the results have been mind-blowing. Anyways, back to what I was talking about before. You basically have an original consolidation into 1 impulse up, 2nd impulse up into some kind of higher time frame liquidity level or point of interest. So this is going to be a point of interest. So 1, 2, perhaps 3 impulses up, and that is going to be your setup for tomorrow. So if you do get this during New York, which I think you will get this during New York later, then it's going to be a pretty easy trade towards the downside. But there is also the chance that today could just be a ranging day / an inside bar. An inside bar is when you do not break any of the previous days. Well, actually, you've already taken out the previous day's low. So yeah, overall, I am anticipating this setup to happen. And if it does happen, then this is going to be your game plan for the day. And guys, we have the macro playbook masterclass tomorrow at 2 p.m. GMT. Do not miss this. I've made like 150 slides and about 6 bonus materials with quizzes, flashcards, checklists, and just with everything that you need to never have any questions about macro again and to actually use it properly for crypto to position yourselves not only for the long term, but also on the short term. And again, the link to sign up is the first one in the description box below. Otherwise, I'll see you guys in the next one. Bye-bye.